VeChain is exploding to the upside. But we projected this back in October 2021, and it's followed textbook Elliott wave and Fibonacci ratios and thinking based on buying and selling behavior. So we are going to do a three-part series. Today we're going to focus on pattern. How do we identify the pattern literally 5 months ago and what's likely to be the pattern tomorrow? And then part two, we're going to focus on Fibonacci price. And then part three is really projecting into the future of what's likely to occur. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive into VeChain. So we did a video on VeChain back in October. October was the date, October 12th. And what we said, and it's one of the best, it's just textbook. What we said here, if you look clearly, it says we should anticipate a wave B and then a wave C of a wave 2 before we anticipate this upside movement. Now, this part of the movement seems to be occurring now, but how the heck did we anticipate this in advance and this in advance? Literally 5 months in advance. The method behind the madness, Arthur C. Clarke said it nicely. He said, any advanced science is indistinguishable from magic. And if you don't know Elliott waves and Fibonacci ratios, it looks like magic, but this was just bang on. And that's what we're going to cover today from a pattern perspective. So if we look over here, and by the way, if you're brand new to Elliott waves and you don't know the 3 key rules of Elliott wave, take my free Elliott wave and Fibonacci masterclass is in the link below. I cover this in detail. So what I've done is I've taken the date back to where we did the video, this video over here. I've just taken the date back. So we're going to unfold the data to see, just look how accurate this is. And again, we do probabilities, never certainties. Just because this one played out pretty much exactly as anticipated, it doesn't mean it's always going to be doing that. But what we can look over here is we hit this wave B. And even when it did hit this wave B, the overall analysis, the pattern perspective was, okay, after a 5-wave movement to the downside, 1, 2, 3, 4, 5, we should anticipate a 3-wave correction, A, B, C. So that was the thinking. And then we should have one last leg, which typically unfolds into a 5-wave sequence that often looks very similar to the first leg to the downside. And then what do we get? We got this nice movement to the downside. Look at this. Just textbook, and then all the way down. And it was like bang. So that's what you call just a piece of art when it comes to Elliott wave and Fibonacci. Keep it in mind that we did the analysis in October 2021. How cool would it be if you could see the future with high probability? Well, that is because the Elliott wave, what most people don't realize, Elliott wave combined with Fibonacci ratios is a leading indicator, which is aiming to get you 2 steps ahead of the market so you can anticipate, as opposed to being 2 steps behind the market where you're always reacting. And if you don't like it, you can take the free masterclass in the description link below, because it breaks down everything for you and you'll get immediate access. Literally click, yes, show me how, and you'll get immediate access. But what I want to finish on today is, because we're going to do this in 3-part series. Today we're going to focus on pattern, right? The main thing you want to be aware of is 5s and 3s, 5s and 3s, impulsive movement and then correction. But the reverse is also true. So this is really on the downside. We got this 5 and then this 3. But what we want to be aware of is the macro degree picture, the intermediate, and then the micro. You go, Jigeo, what? Come again? What's this? All right. The macro is the biggest degree wave count that we can see. So you got this upward movement, and we're calling that a wave 1. And we've got this downward movement, and we're calling this a wave 2. That's the macro. That gives us context. So when we're analyzing the chart, we're actually analyzing the psychology of humans, us, the millions of participants in VeChain that are betting on the price, buying and selling, speculating. What is the psychological mood which allows us to read the market, what's likely to occur next. So the macro picture is called wave 1 and wave 2. So down here is calling a wave 2. Then the intermediate. So then we go to something called intermediate. So you got your macro, and then you're going to go 1 degree down to say what's the next wave count, because there's waves within the waves. Yes, waves within the waves. So the focus here is going to be this wave 2 breaks down into 3 clear waves. We got your wave A, you got your wave B, and you got your wave C, which is this over here. So now that's your intermediate wave count. So we've gone macro, wave 1, wave 2, then you've gone 1 wave count down, which is intermediate, which is now the ABC. But the ABC tends to also have typical waves within those. And why that's important is it allows you to really narrow down where the market is likely to reverse and take off. So now we're going to look at the micros. We've got macro, intermediate, and then micro wave count, the 3rd degree of wave count. This is advanced Elliott wave, but we can keep it simple. Just because it's advanced doesn't mean it needs to be difficult. But most things are difficult before they're easy. So now this wave A, which is the intermediate count, look at this. It breaks down into a 5-wave sequence. This wave B, which is on the intermediate count, breaks down into an A, B, C. Just to make that clearer, even make it even clearer like this. Oh, that's not the one. Why is it not? That's a bit strange. Oh, here we go. This is why. Yeah, there you go. A, B, C. That's the intermediate wave count for this particular wave count. That's what we're talking about here. Sorry, the micro, the micro count. So you got your A, B, C as an intermediate, and then you've got this B, which is part of the intermediate, breaks down typically into 3 waves, which is this black line, A, B, C. This was one of the big clues why when I did this video, why I was so confident. And I'm not confident to be right, confident to have the probability in my favor to go, okay, we're likely to get a wave B over here and then a 3rd leg down, because after an impulsive move to the downside, you typically get a 3-wave correction. And then on a macro degree or an intermediate degree, we should anticipate 3 as well. So the real lesson here is probabilities, never certainties. But more often than not, these patterns will play out. These patterns will play out. And then the microwave count on the way down to this wave C, because you can peg like almost to the dollar or to the penny in regards to VeChain, where it's likely, highly probable, an end of a wave 2 is going to be. So now we're looking at this part of the micro count. And you can see I've got this 1, 2, 3, 4, 5-wave count to the downside. And we did this in advance. This is not new. We did this in advance, way back. And even if I just do this now and just show you that this breaks down as well. So now we've got this degree. So now let's just move the data to where we are today. We can see that we've got a bit more move to the downside and it's starting to take off. So we did this analysis a while ago. So now we have to just update it to go, okay, here, here, and here. So we knew with high probability that this was going to be likely to be the low. We've got this initial movement to the upside. It hasn't taken off yet. It's just the initial movement to the upside. This is today's date. So we want to be just aware of that. But the main focus is when you're looking at charts, what glasses are you looking with? Are you just looking at pure speculation and just not seeing anything? What we're aiming to do is give you the glasses of Elliott waves. So you can go, okay, when you see this movement to the downside, what's likely to occur next? So we're going to finish on lastly, and we're going to do this in 3 parts in terms of the next 2 videos that I'm going to do, is the last thing I want to move on to is what are we anticipating next? And we'll cover this in more depth in a future video. But for VeChain, we are anticipating a wave 3. Why we're doing this analysis is after a wave 1 and a wave 2 comes a wave 3. We'll get this more accurate. But right now, the main lesson from today is you can start anticipating what's likely to occur in the near future by knowing that markets move in 1, 2, then 3, 4, 5 to the upside. The 3, 4, 5 hasn't happened yet on the upside. That's what we're anticipating with probability. But on the downside, you can peg where's the likely end of this correction. It looks like this may be the end because we've had this nice upward surge. And also to know that these waves within the waves break down. And if you want to, again, learn the micro, the macro, and the intermediate wave counts, take my free Elliott Wave Fibonacci Masterclass. It's in the description link below. I really cover it in a lot of depth, but at a high level, in a digestible fashion, broken down step by step. And I think you'll find it very, very valuable, and you'll get literally immediate access. Anyway, Fibonacci Masterclass, how to read the markets like a pro. I've been doing this 15 years, mainly in the Forex markets for the first 10 years. The last 5 years, really been focused in the space of crypto. And what I found is, based on human psychology and fear and greed, crypto applies probably the best to Elliott Waves, or Elliott Wave applies the best to crypto because the speculation is just higher on a new front. So if you like today's content, like, subscribe, hit the bell notification. We're going to do 2 more parts of the VeChain. We're going to cover price when it comes to retracements, so we can really peg that wave 2 low, and another advanced Fibonacci ratio that you want to be aware of. And then the third part, we will cover where is it likely to go with high probability if it takes off, and if is the operative word, mainly because it's probabilities, never certainties. Right, let's finish on a quote. Did I finish on a quote? Did I read a quote already? All right, let me finish on this quote. All right, here we go. We're going to go with Leonardo da Vinci. Leonardo da Vinci. Simplicity is the ultimate sophistication. Simplicity is the ultimate sophistication. When you're doing any type of analysis, you can get thousands and thousands of pieces of data. I like to keep to 3: momentum, pattern, price. If all 3 coincide, the probability is that the market is going to move in that direction. Whether it's the end of a correction and it's going to move low, or it's the end of a macro correction and it's going to move high, or if it's an end of a trend, what's likely to occur. And momentum, pattern, price, keep it simple. Practice, practice, practice. And practice is the mother of all skill. All right, I will see you very soon for part 2 of VeChain. See you soon.